Hi fellow cashflow builders. Let's find out today how margin investing made investors paper hand and caused 2 months of pain in the market. Let's understand more about margin investing first. Imagine investing $10,000 to buy a stock and the stock price goes up by 40%, you would have realized $4,000 in profits. In margin investing, you can borrow $20,000 to buy the stock, and when the stock price goes up by 40%, you would have made $4,000 on your $10,000 cash and another $8,000 on your $20,000 of borrowed money. And when you return the $20,000 to the bank, you would have realized $12,000 in profits just on your $10,000 initial investment. But what if the opposite happens and the stock price falls by 30%? When the bank does a margin call, you have to return the $20,000 while your $10,000 of cash is still in the stock. Selling the stock now will return you $21,000, and after returning the $20,000 to the bank, you would have realized a $9,000 in losses. So to understand the scale of margin trading, let's find out how much margin was traded between March 2020 to April 2021. Since March 2020, the average margin traded every month was $20 billion. And between November 2020 and February 2021, the margin traded grew by almost 160 billion, crossing the $800 billion mark. And that's around the time that investors grew very confident, thinking that the momentum of the market will continue going on, therefore buying high PE stocks and high speculative stocks with all that borrowed money. And bam, the bubble popped. The bond bubble popped in February this year. Now just imagine how much paper handing had to happen to avoid those margin calls, and how much liquidity did they really have left to afford those margins. So is it going to remain gloomy over the next few months? Let's find out in my next video. Stay safe, stay invested, take care.